And the other big economic news this week comes from an unexpected source. Video game retailer GameStop, an army of small investors, has been pushing the company's stock price to huge heights. Even the world's richest man, Elon Musk, has played a part in this, tweeting GameStonk with a link to a Reddit page that has been behind all of this. That page is called Wall Street Bets, and this year the bettors have been winning and winning big. Shares of GameStop have been up 1,900% in 2021, so that means the stock is worth 19 times what it was at the start of the year. And this isn't the only one. Another company in dire straits, AMC Entertainment, is up 890% this year. So what should we make of Wall Street Bets and the eye-popping prices of all of those stocks? Michael Godwin is Chief Investment Officer at Fragasso Advisors, one of Pittsburgh's biggest investment firms. And thank you so much for joining us here tonight. So our first question, just what is going on here? How have online investors been able to push the stock price so high and do it in such a short period of time?
Thanks for having me, Kim. It's the power of social media for better or worse. As you mentioned, there's a website called Reddit, and on that website, Wall Street Bets is a forum where investors can share their ideas, and it seems as if there has been a concerted effort to buy the stocks of companies that were heavily shorted on Wall Street. And because these companies are generally smaller in market cap than the Microsofts and the Apples of the world, these investors, when banding together, can have a meaningful impact on the stock's price.
And let's look at the totality of all of this. It's having an effect on the market as a whole, too. So the Dow having its worst day since October, losing more than 600 points. The NASDAQ and S&P 500 did even worse today. So why is this happening?
The Dow and the S&P 500, I think, are just taking a breather today from a great run-up over the past 3 or 4 months or so. Again, the Fed came out today and they said that they're going to be very accommodative for the foreseeable future. Which is really good for the stock market. I think as long as this, the mania that we're seeing in certain heavily shorted names like GameStop, AMC, Tootsie Roll's another one, as long as it stays isolated to those heavily shorted stocks, we think that that is a good thing. If it spills out to the broader market, that's when I'd become a little bit more worried about the stock market in general.
Yeah, it's a good way to characterize it, mania. And we've got a lot of viewers who are invested in the stock market, of course, whether it's a 401k or their own investment selection. So what advice do you have for them? Because as an investor myself, I see this and I think, what am I missing?
Yeah, it's a great question. I think, fortunately, our clients really haven't asked about these names. I think these stocks in particular have become very detached from fundamentals, and it's become purely speculative driven. And again, fortunately, it is only on an isolated subsector of the markets. To me, honestly, Kim, it's reminiscent of what we saw in Bitcoin in 2017, where Bitcoin went from about $1,000 up to $19,000 in a few short months before coming back down to reality. So again, I think when you look at the broader market as a whole and the economy as a whole, I think the economy is going to be on an upward trajectory in 2021, particularly as we approach herd immunity, hopefully by Q3. But again, the stock market has pulled forward a lot of those gains. So I think you're going to see a little bit of a bumpy ride in the stock market. But overall, I think the equity markets would be positive in 2021.
Yeah, you mentioned Bitcoin there, and really that's the first thing I thought of today, too, was crypto and all of the excitement around that. So do you expect now that regulators or Congress might step in to make any changes as a result of all this?
Well, it's funny. They mentioned that they're watching the price action in GameStop and AMC today, but it's the retail investors who are making all the money, and it's the hedge funds and the institutional buyers who are losing out here. So I can't see a reason why they're going to step in and necessarily regulate against the retail investors there. They may want to come in and make sure that hedge funds and institutional investors aren't taking advantage of certain retail investors as we go forward and shorting companies that might be in dire straits. But overall, I think it's going to be a tough climb for regulators to do a lot of damage there.
All right. Michael Godwin, Chief Investment Officer at Pittsburgh's Fragasso Advisors. Thanks so much for breaking all of this down and making sense of this for us tonight. We appreciate your time.
Thanks, Kim.
Okay.
Appreciate it.